Hello and welcome. In this video, we will learn about a two candlestick bearish reversal pattern called as dark cloud cover. Okay. Now, this dark cloud cover is opposite of the piercing line pattern that we learned in the previous video. But this pattern is powerful than the piercing line pattern. Piercing line pattern is a bullish reversal pattern and this is a bearish reversal pattern. But when compared with the piercing line pattern, this dark cloud cover pattern is more powerful. Okay. Now let us learn about the characteristics of dark cloud cover. First is that this must occur at the top of an uptrend. There must be an uptrend, and at the end of the uptrend, this pattern must form. The first candle must be a long green candle, meaning bulls must be controlling the price here. Then the second candle must open above the high of the green candle. The second candle must open above the high of the green candle, which has happened here, and close below the midpoint of the body of the green candle, and close below the midpoint of the body of the green candle. So this is the green candle, and the green part that you see here is the body of the green candle. And its midpoint is here. Okay, the mid of the body of the green candle is here, and below this midpoint the second candle should close, which it has happened here. And if that happens, we consider it to be a dark cloud cover. Okay, the opening must be above the high of green candle, the closing must be below the midpoint of the green candle. Okay. Now, this is a perfect dark cloud cover. We sometimes go ahead with the trade with the variations too. These are some of the variations of dark cloud cover. Here we have a green candle, which is just as we want it. Here, the opening of the second candle is not above the high of the green candle. It has happened below it. But then, the closing of the second candle is way below the midpoint of the body of the green candle. And that is what is more important to us. We want the close below the midpoint of the green candle. Okay, the wicks are of no concern to us, so we are not worried about it. The close must be below the midpoint of green candle. So this is an acceptable dark cloud cover. Here the opening is below the high of the green candle and the closing is here the opening is below, but at the same level of closing of the green candle too. Okay, so the closing level and the opening level are same, but the close of this red candle is below the midpoint of green candle, which is what we want. So this is also acceptable. Okay, we want the close of the red candle as near as possible to the opening of the green candle. If it is here, then it is still better. Alright. So these two are the variations. Whereas these two are not considered as dark cloud cover. So here we have a green candle, just as we want it. Here we have a red candle. The opening here we have a candle, the opening of which is above the high of the green candle, which is just as we want it. But the closing is not below the midpoint of the body of the green candle. The mid of the body of the green candle is somewhere here, and the red candle has closed above it. Even though wick has went below the midpoint of the green candle, the closing is above the midpoint of green candle, and so this is not acceptable. Here we have a green candle. The opening of the second candle is above the high of the green candle, which is fine, but the closing of the red candle is at the same level of the midpoint of the green candle, and even then it is not accepted as dark cloud cover. For us to consider it as dark cloud cover, it must close well below the midpoint of the green candle. Alright? Yes. Now let us take two examples and see how trades are taken. So we have an uptrend here. This is a day chart. We have an uptrend, and at the end of the uptrend we have a green candle and a red candle. The red candle has opened above the high of the green candle, and it has closed below the midpoint of the green candle. So this is an acceptable dark cloud cover. If we decide to take a trade, then first we must see if there is any resistance behind. If it is there, then this pattern becomes powerful. Next we need to decide the stop loss. Stop loss is placed above the high of the red candle. Then we decide the target. The target is here, and then we take a trade. So the trade has been successful, but before that our stop loss has been hit here. Okay, our stop loss was hit and the trade went in our favor. Alright, so we would have been out of the trade right at this moment itself. Okay, next, one more example. We have a nice uptrend and we have a perfect dark cloud cover, a green candle and a red candle which is closing below the body midpoint of the green candle. Okay, now we look for a resistance behind. If it is there, then this becomes powerful. We place our stop loss, we place our target, enter the trade, and trade goes in our favor. Okay, so this is how we trade the dark cloud cover. Now you can be more safe by waiting for price confirmation, meaning you need to wait for a candle to close below this closing, below the closing of the red candle, which has happened here. But if you wait for price confirmation, your stop loss would be a lot. Okay, so that is a disadvantage here. Alright, you can enter right here. If you wait for price confirmation, stop loss would be more. Okay, now to understand the psychology of a dark cloud cover, price was moving up, the bulls or the buyers were in control. Then suddenly price opens gap up. Once again, bulls or buyers are happy, but then they were not able to take the price above this level. They tried to take it up, they took it up till here, but at this point sellers or bears came in and pushed the price down. They pushed it down till here, but at this point buyers came and pushed the price up. But still the bears or sellers were successful in closing the price here. They did not allow the buyers to take the price up. Meaning, even though the buyers had an entire day to take the price up, they were not successful in doing so. So at the end of the day, the sellers won, and it is a signal that bears have entered the market and will probably take the price down. Alright, so this is about dark cloud cover.